All right, ladies and gentlemen, good morning. We've got Harry Boxer, who is the author of thetechtrader.com, a real-time diary of his trading ideas and market analysis. He has more than 50 years of Wall Street investment and technical analysis experience, including 8 years as chief technical analyst with 3 brokerage firms. Mr. Boxer was the winner of the 1995 and 1996 Worldwide Internet Stock Market Trading Contest, the Technical Analysis Challenge. Harry, we're so happy to have you this morning. The floor is yours.
Okay, folks, I'm going to be talking today about profitable day trading using intraday patterns. The markets are quite active, and let me also tell you that my philosophy is that intraday patterns are just as powerful as patterns on daily charts, if not more so, because they give you immediate gratification from their consolidation patterns. I believe in price volume surges and pattern recognition to catch big moves in the market. Just quickly, what I do in my site is I analyze patterns from the previous day and the patterns that are breaking out pre-market based on news patterns. That's my morning routine. What I'm looking for is stocks that are gapping or running or surging with big volume, 5 to 10 times normal, even in the pre-market. I want to see what that news is. I'll look for pennants, coils, and flags. 5-wave intraday moves are my forte. I look for stocks similar to, let me show you a chart. Here's one we traded today. Exploded, pulled back. We bought it on that first pullback at 5.25. And within an hour, the stock was 661. Many of our traders, I got them out there because my target was 660. The actual high was 664. It was almost perfect. And you can see what it's been doing ever since then. So what I'm getting at is I'm looking for 5 waves intraday. In this case, we've only gotten 1, 2, 3, and 4. So now we may not get a 5th wave because usually the 5th wave comes when the trend continues. And this would be a 1, 2, 3, 4. I was looking for this coil to continue and break out. It did not. Instead, it broke down, and my traders were stopped right there at about 590. It's now 557 and falling. Now, falling wedge isn't a bad thing in my experience, and I'm been doing this for over 60 years since I'm a teenager. And I can tell you that falling wedges, particularly when they're 1, 2, 3, 4, 5 wave affairs, often snap back. Watch for that to happen. But for the most part, my people were in here, out there, looking for entry points. Ideally, when you get a stock that's a low price position like that with huge volume, trading 34 million shares today in an hour and a half, way above the average volume. That's what I look for. Take a look at the daily chart. Now, lately, the stock's been, powering ahead as it moves from under 2 to 9, and then it pulled way back, right to support though. And look where it bounces, right off that support level. This is the key support level right there, and we got that bounce this morning. Now, again, this isn't a bearish pattern. I should put it this way: it's bearish from the standpoint of the breakdown, but it's potentially bullish for a completion of a falling wedge, which if it pops with any kind of energy, we look for volume first, similar to what we had here. And then we're going to get a pop back up to 590, 635 or more. But that's something that's a pure conjecture. Trending is what we look for. Stocks that are moving. For example, in the case of SKYX, there was some news on it. The stock popped and flagged. There's your breakout. Broke out through 5. We went in. We quickly saw 574. And then the pull back to support and a sharp bounce up to, I had a target of 6.25. We reached it right there from the breakout point at about 515. So it was a quick dollar. And now look at this. Again, what we look for is consolidation patterns, particularly stocks that are pulling back a low volume, stocks that are continuing to trend upward and holding that trend. Then you can extrapolate with it. And by the way, in the vast majority of cases, when a stock runs, it runs in a 45-degree angle like this is doing. You'll see thousands of examples over the years of stocks, excuse me, start off with a pop and a flag, and then trend and wedge. At this point, I'm looking for the breakout of this pattern. I always do a mid-range target. Mid-range is 690, upper range is 7.75, 790. So just because the stock is consolidated doesn't mean it's dead. But what you want to do is take a look where support is. Right now, this is his support zone. There's your 50-period moving average here, that red dotted line. There's a pullback low in this case, both of them in the 555, 560 range. So your stop is under 550, thereabout. Any move above 612, 15 right here, with any energy, could pop this stock and run it to 690, 7.25, 7.75. Keep an eye on SKYX for the rest of the day, and we'll get back to that a little later. Here's the TBLT. Still watching for this one and maybe make a move. But let's get back to where I want my presentation. So what I'm looking for on most stocks is 5 waves. So let's go back to that for just a moment. This is a 1, 2, 3, 4. In the case of SKYX, it's a quick 1, 2, 3, 4, 5. Elliott wave basic analysis. And one of the reasons this is going through a consolidation is after 5 waves and a move from 416 to 642, a 50% move in like an hour, the stock then pulls back and wedges. Now a breakdown from here and it may be done, but it also may be nothing more than in the longer term pattern, 1 and 2. And if 3 comes in, you're looking at 1, 2, 3, 4, 5 up there. This is why I'm thinking this is bullish potential consolidation in this zone. Take a look at that one little bar right there, very, very narrow, very quiet. That's called the apex of a triangle. When you reach the apex, if that pops with volume, it often triggers, like it did there or there, an additional move up. In this case, it was halted, spiked, and then came down and coiled. Any way you look at it, folks, that's the bull coil, and it's the kind of stock that we feature at detectrader.com. If you're an active trader intraday, you want to be in my room with several hundred people, very astute traders, some of which have 25, 35, 45 years experience. I have people in my room with me since I started in 2001, literally 20, 21 years, and they're still trading with me. Today, pre-market, I put out the solar group, particularly First Solar and TAN, and here's why. First of all, I like this chart. You can see the breakout of a base with a spike up and a break through the tops. Therefore, your resistance and target this morning was 91. The secondary target, 93.4. Take a look where it reached. 92.5. And then came down in a mini 1, 2, 3, 4, 5, or a mini corrective type pullback. Now it subsequently broke out, not enough heavy volume. So what I'm going to be looking for for an extension move on First Solar is a move through 91 again. If we get through that, 93.5 and 96 maybe targets, but the stop is right there, and I would put a hard stop under say 87. All right, that's the way we trade at detectrader.com. More ideas from today was plug. Pre-market, I saw the double top breakout and the pullback and pop and little flags in here. When the market opened, it went vertical. Since then, it's doing this. So this is a setup for more upside potential because of narrowing bull coils right here. We take a measured move on it. The minimum target I would have is 2 points from here, or 22.5, 22, 40, 50. So my target is now on this one, right about there. So if you're in plug today or watching it, watch for a price volume surge of some energy to get it out and have it start to run. Usually when it's a lot of space in a chart, I'll go mid-range and say 21.5, 65, and 22 and 40, 50 are my targets. Where do you stop it? Right there. And roll under 20, 35, 40 gets me out. That's what we do at detectrader.com. Now, I want to also show you something else. This is what you also see in my room. That is my board and what I follow. I follow index charts. This is a 5-minute NASDAQ 100. This is a 5-minute S&P 500. This is the hourly charts. So I'm constantly comparing the 4 to see where we're at in the trend. I indicated yesterday morning that this market was near a key resistance level at the top of the channel. And sure enough, we got a nice 50% retracement, and then a double top bounce. This morning, it came off that double top to support, and we bounced sharply. So far, so good on the NASDAQ 100. S&P not too dissimilar. It looks like this. a wedge breakout, a retest of support, and a bounce to new highs, which filled the gap, by the way. And now my target zone's up here at 40.80. We're currently 40.24. So I'm looking for a rally if we get to 40.40 of another 40 points on the S&P potentially. Seriously. And on the NDX, NASDAQ 100, the patterns are similar, even stronger on NASDAQ. There's a line of resistance for me in your next target at 12.9. 12.89 zone. Up there is my target for this next move on the NASDAQ 100, but there's some good resistance up there as well. What you also see in my board is the following. I put 6 of the NASDAQ 100, NASDAQ level 2 boxes. He showed me support, resistance, and targets and things of that nature. Unfortunately, they're not the ones that I'm currently looking at. Some are, but I neglected to say that I'll have to do that when I get back on board with my people, which are expecting me in a little bit. But what you can see instantly here is a 20 or 30 stocks I follow closely, about 35 actually. Also, many of them are swing trades. And you can see the advanced declines in New York, NASDAQ, and up-down volume on the indices and where they're at. And the tick index is currently plus 406, 427 now on New York. You can see how the indices have already done a 50% fib retracement from that top to that bottom and retracing back up near resistance. This will be a test for the market. And by the way, you'll constantly see me. I do want to point out to those of you who aren't aware of thetechtrader.com that this is what you see live all day. I have a webinar up that I have on all day. So you can watch me looking at the indices, drawing my lines, and in particular, drawing the lines on individual chart patterns. Now here's plug coming out of that coil. It might be a buy right here, but I'm not seeing enough volume yet. Should it move over 21.25, it might be a trade to 22.5. Taking back an SKYX, that tried to pop with a little volume, but there was no follow through, which is dangerous because it often will do that. This is why you got to wait for the energy, wait for the follow through. Right now, it could be a pattern failure, and especially if it breaks down below right where it is. Some more examples from today. A lot of them are on the solar stocks, but in this case, SIGA, which I've been following closely, involved with monkeypox. When this stock exploded, imploded, and then popped, it had a falling wedge right there on the breakout of this falling wedge. And that's what I'm talking about, folks, when I talk about falling wedges. A falling wedge in a bullish trend, particularly on low volume, when it pops, where it did right there at about 10.5, often leads to much higher levels. From 10.5, folks, we've gotten to almost 20. Now, this morning, I had a 1990 target. Why? The stock popped and broke out there. We went long about 1845. It stair-stepped its way higher, forming wedges along the way. Notice how, in no case did this low or that low, or even that low yet get taken out. So the angles change, and I'm constantly drawing and redrawing my lines because that's what you need to do if you're a technical analyst. Now, the intraday pattern looks a little like that. So it's kind of at a critical level right here, because we don't want to see it make a lower low or take out the VWAP. That's the volume way, the average price right there. There's another bull flag. I don't think this one's done yet unless it shows me it wants to crack support. I raised this to there. Support number 1 would be on that low at 1930 range. The VWAP just below it at 1920, it would be wise to put a stop under 1920. If it pops out with any kind of energy and takes out 1970, targeting 20, 35, 45 up there. On the negative side, after multiple waves up, and it does look like a 1, 2, 3, 4, 5, and then maybe even a higher high, this bull flag becomes less reliable because many waves have been completed, and it may be too far up in the trend. So it isn't as reliable as it was here, for example, but there, if it does break out, we can see the run. If it doesn't, we're likely to get a test and or breakup support. But SIGA was a great day trade for us today. and it remains so. We got lucky with ARRY, solar-related stock. You can see in the morning that pre-market it was trending. Now, I said if it breaks this flag, we're going long. Well, pre-market before it went long, before the market opened, just a few minutes before, at 1470, I gave it a day trade on it. Within minutes, it was 17. At that point, I told everyone in my room, if a stock's trending pre-market and it opens with a blast, sell it every time. You can sell half, you can sell all of it. But the point being, you don't know if that's going to be a thrust that breaks it out and runs it into a trend that keeps going or not. The other thing, the other signal was when it came down and bounced, the volume was much lower. As a result, anybody who didn't get out, I told them to get out because of resistance, 50% retrace. And prior channel top was a reason why the stock might fail, and it did, or at least it pulled back. Now we have a coil setting up. So I'd watch this carefully for a pop and run. Well, those are the kind of trades you see at detectrader.com. Look at the market running here. I'm convinced that all the people that I talk to, and I have many institutional clients, and many of the big traders in my room, excuse me, we're all bullish. Excuse me, bearish, and I'm the only one that's bullish. And I kept thinking, I'm sorry, folks. There you go. I got a cough this morning. It'll tickle my throat. Sorry about that. So you can see that the markets continue to take every advantage of a dip and run up, which was the opposite of what they were doing. They were selling every rally. Just take a look at the S&P 500 angle one more time. Off the low, a 1, 2, 3, 4. Basically, it came down hard and bounced, and then consolidated, broke out. We're in an uptrend. In addition, the downtrend line from the top has been broken. So the market has every reason to go higher, and the shorts have every reason to get squeezed. But folks, I don't have a lot of time left, I believe. What I'd like to do, if I can, is maybe take some questions about anything you see. I do want to take a moment, though, before I do that, to show you something. What you see when you go to my room is detectrader.com right there. If you go start a free trial and just click on that, put your name, address, phone number, and password in, and you're in. No credit card necessary. Start a free 10-day trial. Come into my room, experience what I just showed you daily. I think you'll be very impressed. 85% of the people come in, sign up. It's a nice place to be with very bright members, very friendly people. If you're new to trading, they like to mentor. So you may want to come in there. But if you log in to the site, like I'm going to, I'll show you the trading room real quickly. Hold on a moment, I'm in the wrong. 1 second. There you go. I'm going to log in. You go into your posts and then to the trading room, and you'll see post after post after post from some of the smartest traders around, giving you their ideas or alerting you to something's breaking out, et cetera, et cetera. So I encourage everybody to come into my site for free for 2 weeks. Doesn't cost you anything. Enjoy the ride, make some money. Many people have told me they paid for their first 2 years of subscription just in the first couple of weeks. So that's pretty much it for this presentation for today. And I'd love to take some questions if you have any.
All right, great presentation, Harry. We've got a couple questions here. First question is, do you just do individual stocks or indices as well?
Well, I monitored that. Okay, I think I showed you that, but let me do this real quick. What I showed you earlier was I monitored the indices very closely, like minute by minute. And I monitor this being the NASDAQ 100 5-minute, S&P 500 5-minute charts. You can see the trend that's developing on the S&P right here, and the retest that's underway. I also put the hourly charts up on both, so you can get an idea where the overall trend is. And while I'm doing that, I'm also monitoring a half a dozen stocks that we're trading during the day with their with their NASDAQ level 2 boxes so we can get an idea of what's going on. What I'd like to do is take a few questions on some stocks, give you my take.
All
Or
right.
if you have any questions about the site or anything we do, please feel free to.
What is your view on the pharma stocks?
Well, I love biotech, and I think they're extremely blown out. And so many of this group are so many stocks, so many junior stocks in biotech, and even large ones are beautiful uptrends. What I'm really enamored by right now is LABU. Let me show you why.
How can people go to your website, Harry?
I'm sorry?
We have another question is how can we get to your website?
Yeah, go to thetechtrader.com. Let me bring it up one more time. When you go to thetechtrader.com, and you have to put the THE in there, thetechtrader.com. See the URL up here? Thetechtrader.com, thetechtrader.com. And just simply go to start a free trial. And you'll be in. Right there. First name, last name, phone number, password. And next thing you know, you'll be in. I was just going to say on the LABU of the biotech group, this is a biotech ETF that's dropped from 184 to 4 and then bounced and consolidated. If we get a rally in the market where the biotechs take off, this is going to be double, triple from here, my take. Or you can be something a little bit safer, less of a triple, and just do the XBI, which I think is going back up to 90, 95, 97. It's currently 80, 82. Are there any questions on any specific individual stocks?
Yep, we've got a question asking about Apple.
Sure. Well, you can see Apple is broken out. I told everybody a couple weeks ago, if it breaks this declining top line, the steep one there, which it did, and then retested the moving averages. Notice the moving averages crossed over. This is very bullish in a rising channel. It's if we can get above today's high, 157.5, we might see the stock in the low 160s, mid 160s. The next key resistance level and the juxtaposition of 3 lines comes in at 164 3/4. So I'm looking for 6, 7, 8 more points, particularly if the market runs. Anything else?
And we want to know about Snow,
SNOW.
SNOW, yes.
Yeah, I had a swing on Snow, but it broke down here. Now, I don't think it's a major breakdown, but now I want to see this line taken out. That's the major trend line. So it's got a lot of work to do. It was looking much better than it was earlier. It's looking not as good as it was earlier, but I'll acquiesce if I see some energy. First of all, it's got to get above the 145 area. That'll take out these 2 moving averages. And then the targets are 155 and 165. If we get through that level, then you're looking at 185.90. But I would still stop it underneath 129.30 zone. That would break it down hard, and you don't want to be in it if that occurs. There's your stop.
All right. Thank you very much, Harry. And thank you to our attendees. We've got more content coming up, so stick around and we'll be back shortly.